I'm Priscilla Barrera with the Investing News Network, and here with me today is Joe Lowry, who's president of Global Lithium. Joe, thank you so much for joining me today.
Thanks for having me.
So I wanted to start by asking you, how are you finding sentiment in the lithium space? We're here at the Fastmarkets conference. What have been some major highlights for you from the event? How are you finding sentiment overall?
I would say that there's more interest at this conference, more of a buzz than any other year I've attended. And I've attended most since it started in 2009. I also think part of it is the fact that people have been cooped up in their houses for most of the last 2 years. So, I think it's a balance between people are just glad. I've seen a lot of people over this last few days that I haven't seen since 2019. So I think that's part of it. But the overall sentiment, I think the overriding theme of this would be lithium's time has come.
So let's just jump into the specifics of lithium. How do you expect the market to perform in the short term? So we've seen prices increase in the past year. Now they're stabilizing a bit. How will the supply-demand dynamics play out for the rest of 2022?
Yeah, I don't have a crystal ball, but let's just look at the reality that this is the year, 2022 will be the year of the most divergence from high to low in pricing that we've ever had by a wide margin. I can show you less than $10 prices that are still valid, still in effect, still being shipped because of contracts. And you can see the almost $80 a kilo or 80,000 a ton. So we have never had that kind of dispersion. And what do I expect to have happen? I expect the market to continue to be tight for the rest of the decade, honestly. And I know there are some banks out there predicting short-term price crashes and on the back of lepidolite being developed. And that's a whole other story we could get into. I guess I would refer people to some of the comments I've made in other media rather than digress into that. But yeah, my feeling is I think the current price is unhealthy. I think it's too high. That's an odd thing for somebody that's been in the industry for a long time to say, but I don't think the industry is well served by $80,000 a ton pricing. That said, the market's the market. And market forces have put the price where it is, and largely it's the fault of the people that need the lithium the most because they weren't there to invest, to support small projects when it was needed. And now it's really too late to catch up in this decade, in my opinion.
One of our first interviews a few years ago in 2018 had the headline, "Debunking the Oversupply Myth." Would you still call it a myth today? Do you think there's still confusion and over-optimism around what supply could come on stream?
I think as long as there is any bank that has a cloak of credibility predicting price crashing, people are going to wonder. Lithium is still an immature industry. It still is really buffeted by the forces of whether it's Bank A or Bank B, saying, price is going to go in. And usually these banks have very inexperienced analysts that look at PFS and DFS and promises junior miners are making and don't understand that most, if not all, lithium projects in the last 2 decades have been late. And that's a situation that is not going to unwind just because price is high. Because high prices don't increase the talent pool. High prices don't change the permitting rules in various countries where projects are happening. So you can build a gigafactory in 2 years and it takes up to 10 years to bring on, or more, to bring on a greenfield lithium project. You couple that with the fact that now demand is growing each year more than the whole market was in 2016. That's a huge difference. Put another way, you need, between now and go 4 years out with, take Albemarle's growth projection, you need 25 Caucharí-sized projects to come online. That kind of frames the problem.
So let's just then continue on the topic of future supply. And I wanted to talk to you specifically about current producers and their expansion projects and restarts. What are your thoughts on their plans? Which projects are you most optimistic about, and which ones do you think will continue to have challenges to come on stream?
Well, SQM certainly has done a good job the last couple years, but if we put it in the context of the last 5 years, they've missed most of their targets. Now they're over 100,000, hope to do 140,000 tons this year, go to 180 beyond that. That's great, and those numbers would have been huge in terms of correcting an imbalance 5 years ago. Right now, 40,000 tons is a small amount on the back of growth. The other issue, there's two other issues I'd like to talk about though, and that's you have a lot of gigafactories that will be built and come online in the next few years. Every one of them will have a high reject rate for several months. That's lithium that's delayed. That's a negative on lithium supply because it has to go back to a Redwood Materials or a Li-Cycle or whoever it is. And there's a loss in that trip. It's not 100% conversion. So the build out of all these gigafactories actually will exacerbate the shortage. I think that is an important point, and the fact that we have a lot of concern over supply chains and getting China-free supply chains. So we have new players in new jurisdictions, and that adds to the complexity. That would be the other point I think people should look at.
And, if lithium supply doesn't pick up at the level that is needed, we heard here at the conference about potential alternatives to match demand. One of them being OEMs maybe rethinking their EV mix plans or maybe having smaller batteries. What are your thoughts, and what moves do you expect to see from OEMs if they can't secure supply?
I firmly believe that the reality that this is a real structural shortage is going to last a few years. It will be internalized by just about everybody by 2023. And then I think I have to see plans change. Smaller batteries, some of the models that they wanted to bring out will be delayed. We've already seen a lot of delays. When you look at this, high lithium prices, and I've had this debate a few times during this conference, went through some numbers today. I said, okay, if the price of lithium goes up $20 a kilo, you get a 60 kilowatt hour battery, roughly 50 kg of lithium. Somebody's not going to defer a Tesla purchase because the lithium in the battery goes up $1,000 or $2,000. But if you're trying to build a $35,000 lower price point EV to encourage people to adopt, then lithium is going to be a problem, because that the difference between 35 and 37,000 might be a no-go for somebody. And I think we're going to see decisions made based on that. You also have the whole issue with whether you go to LFP batteries rather than high nickel to try to lower the cost. It's going to be an interesting few years, but I do think that the lithium situation will force adjustments by the OEMs.
Now, at this event, you were part of a panel discussing the changing geopolitics of lithium. And of course, China was part of it and the role it plays in the lithium supply chain. Now, what I wanted to ask is, as the West moves to build out its regional supply chains, what do you think we can learn from China and Asia, I guess? And what can the West do better?
I think that you framed the question well, because China and the other Asian countries, if you look at the Confucian cultures, and they all played out differently, the Confucian culture of China versus Japan versus Korea, they're all a little different slants, but they all tend to look long term. They all tend to be willing to sacrifice in the short term for long term gains. I think since I've been involved, China's always been ahead of the curve, willing to invest ahead, not saying, well, if this doesn't pay back in 3.5 years or 5 years, we're not going to do this project. And the West is suffering now because the short-term thinking that most of the companies, it's forced on by Wall Street or poor leadership in some cases. So I think Yeah, thinking for the long term is the short term thing that the West should internalize. In the next 5 years, if they could start saying, okay, we screwed up, we need to modify our behavior, I think that would be a bonus. But I don't expect it to happen.
All right, and what do you think we can do better than Asia?
Well, I mean, if you look at where technology came from, where most of the inventions came from, the West is the education system in the West encourages creativity much more so than the rote learning that a culture where you have to learn, whether it's Japan with 881 education kanji, to get out of high school, or if you want to go to grade, learning the whole writing system is a tedious process that's done by rote. A lot of the other education is by rote. My kids were educated in Asia. I talked to a lot of Asian parents during those years, and almost all of them wanted their kids to go to college in the United States because they thought it was. There's more than one reason for that. It's not just creativity, but I think we do creativity, and I think we've had many of the key inventions were done not necessarily just in the States, but in the West, and then we seeded it to Asia because we wanted to save a few bucks on production costs.
And well, as you know, most of our audience are investors. So just taking into account everything we just discussed, we also have to acknowledge we are currently in a season of high volatility, inflation, recession fears. Has that impacted your investing strategy? And how are you investing in lithium stocks today compared to a few years ago?
The biggest issue, the volatility, and I'm an American citizen, so I'm subject to the American tax laws, but I have fairly significant retirement accounts that there's no short-term trading tax consequences. So while I have Berkshire that I've had since the 90s, I've had Google, Apple, all those kind of stocks that I bought and didn't intend to sell for decades, basically. I have been trading lithium stocks. They're up 5, down 6. That kind of I've done very well just trading on volatility. I don't advise it. It's not investing advice. In my personal situation, because I have a good feel for the whole industry, I've focused on a few stocks, and I've done very well just doing the volatility trade, but in my retirement accounts. My core holdings have not changed. I haven't sold anything. I haven't been tempted. But at the beginning of COVID, in March of 2020, I bought Standard, I bought Albemarle, I bought Live, and I said I would never buy Albemarle. When Albemarle went to 52, I believe it was, I bought Standard at 30 cents. I bought Live at 524, I think it was. I bought Pilbara at 34 Aussie, I believe, and Neo Metals at 17 Aussie. You can't really argue with that, but you have to have conviction that I didn't think COVID was going to last 2 years, but I knew that the whole trend was going to get back in place. If you've been around long enough and you've been through a few, I was there in the 87 crash. I had just started investing. I was there in the 99, 2000 internet stock crash. So I thought the COVID crash was great. It created a huge opportunity.
When you're investing right now in lithium stocks, do you allocate certain amount of your portfolio to exploration companies today?
I don't play the exploration game. That having been said, I have invested in some early stage things just as part of a risk. You have a certain amount of risk capital. So I bought, after the LAC deal, I bought Arena Minerals. A couple other ones I won't go into, but I've done enough of that kind of speculative investing to know that you just assume you're going to lose it all and hope for the best.
Staying with the topic of stock markets, we've seen lithium stocks take a hit, but we have better market conditions. Do you expect more M&A activity this year to take place? And which companies do you think are better positioned to be acquired?
I can't frame it as this year, or because a lot of time it's just the whole circumstances. There's too many factors. We only have 6 months left in the year, so I'm going to say I do expect M&A. I don't want to pick targets, but it's always struck me that Livent didn't get acquired when their stock went so low. I think it would have been a great platform for like a Rio Tinto to just base their strategy off an operating asset. It's not. I'm not advising these two companies that I'm just saying there's just obvious things like that. I do expect more energy transition money. I mean, what you've seen with Koch Industries who've come into the space, not just in lithium, but they made an investment in Standard, but they also Freyr, Li-Cycle. I do expect some more oil companies to make lithium and battery materials related investments in the near term.
All right, which was actually my next question. If you expected oil companies to start maybe partnering or making big investments into the space, but what do you think worries them the most?
Well, I've been talking to oil companies now since the last cycle, so it's kind of confusing to me, because if you take a big oil company's balance sheet, getting into lithium is kind of child's play. It's not that significant. In a way, I think that was a detriment. A lot, people used to say, "Well, why don't you think Exxon's in the oil business?" I said, because if they bought the whole lithium industry, if you went back 5 years, it doesn't move the needle for them. And that now, when you have all the ESG pressure, now everybody has pretty much internalized that EVs are going to happen. Because you go back 5 years, not all the lithium companies believed EVs were going to happen, and they were public about it. I think that's all changed, and I do expect to see more deep-pocketed companies, and it could be back to the big like Japanese trading companies are all kind of circling again, and we'll see what happens.
All right, my last question for you today, Joe, is looking from now until 2025, which has been a key year for the lithium market, could you just briefly explain or describe what you expect to happen to our audience in the lithium space?
Okay, if you go back to 2000, demand was about 300,000 tons. My number was 306. Everybody was within 10 or 20,000 tons. Albemarle's new number is 1.5 for 2025, I believe. If you take that, where's that 1.2 going to come from in that short a period of time? And that's my whole issue with people who think, well, high prices will... lithium's still not a commodity. It still doesn't behave just like a commodity. I know people hate it when I say that because everybody just likes to go through the commodity language. But that's the other issue here, because a lot of people are afraid to project high lithium prices for a long time because they know it's a commodity cycle. The curves will be tighter. I say it's a very long curve. Structurally, the industry just does not have the talent, the assets, and the government support in some of the countries where permitting takes forever to do it. And the United States is one of them. And if you're listening, Jigar Shah, write some checks. That's my summation.
All right, Joe, thank you so much for joining me today.
Okay, thank you.